All right, traders, it is the 12th of November, 2017. My name is Jameson. Thanks for visiting the site. We're looking here at Arena Pharmaceuticals here, trade on the NASDAQ index here. And it is AUPH. Starting from the top, we have kind of a slightly rising RSI here in kind of a bearish to neutral territory. The slow stows in a little upswing. MACD showing that the bearish momentum is declining and hinting that it's actually going to have a crossover and maybe a little upswing. So just looking at this very briefly, it looks like we may actually rally into the 50-day, maybe the 200-day simple moving average, which at this point I'd say is very important because it looks like we've lost the key level of support. And it looks like each one of these levels of support, we rally back up, we test it, we confirm support as resistance, and break back down, stair-step distribution. Honestly, this breakdown is no different. And if we look at the volume associated with this breakdown compared to the others, actually there's a little bit more supply. There's some more technical weakness that's there. So although there may be a short-term rally into the moving average, which is a pretty good trade, I think you'll see a lot of profit taking that's there. I don't like this trade. I think anybody who's trading this is either stuck in it because they bought the highs and they're trying to get this to rally higher to get their money back, which is why it kind of, again, as it rallies, it's being sold because these traders are trapped and they're looking to break even. And the next reason I don't like it is because we missed the move. I think the main move was here and now it's gone out. So that said, the bullish perspective is that this is overbought. And now we're working off these overbought conditions through this lateral trading range. And you could also look that because we're trading below the 200-day simple moving average, now that we're oversold relative to the 200-day simple moving average. So, there's a bias either direction. If you're trading this long, you have to recognize that, there is a well-defined level of support here for the last few weeks. If it breaks this level, you have to stop out because there's just a lot of downside risk, until it actually finds some buyers. And when I say find some buyers, I kind of just look to the left of the chart. When is the last time there's a lot of demand that presented on this chart? And if we looked at demand started right around here, so around $4, $4.25. So, your risk is that this can drop back down, another $2 before we actually find some participants. And then while we're down there, we might as well just close that gap. Everybody sees it. So there's still a lot of downside risk that's present there. If we look at a weekly chart here, let me change this to the weekly. So the weekly has a falling RSI, the stow still falling, the MACD still shows bearish momentum. We can ignore the 50 and 200 day. These actually might be, let's do this. So now this is the 20-week and the 40-week moving average, which are key moving averages here that we're trading below. We actually are trading into the 56-week, so the 12-month moving average, which actually, if you measure this from a Fibonacci retracement from the low to the peak here, this is actually a 61.8% retracement. So there actually is a short-term kind of swing trade that's available for those that want to take the risk. Right here on the 61.8% retracement. But if you lose this, you have to stop out because there is some downside risk that's there. Again, looking at relative strength perspective, there was some relative strength that's trying to retain it, but it's just kind of trading laterally. So it looks like we do have this broad base of support that's there. We've rallied up and we may be in the process of confirming this previous level of resistance here as support. The tricky part is to actually time that so you get a proper entry. So anybody who's buying this is being washed out or they're trapped in it and they're taking their profits. I think there'll probably be a pretty good trade that presents, but it'll likely be a little bit lower. So at the present time, I don't like AUPH.